Hello everyone, welcome to my session. This is Amit Kumar Singh, and I like to welcome everyone to my technical analysis class. So, in this class, I'll talk about MACD. When it comes to MACD basically means moving average convergence divergence. So, basically, when we work on MACD, we are working on a difference between the exponential moving average of 12-day EMA and 26-day EMA. Okay, and we find the difference of both, and that we called as the MACD line. So, guys, I believe you are clear with simple moving average and exponential moving average. And while working on price action strategy in technical analysis, you know that you have worked on multiple moving averages, like for intraday purpose you can use 5-day and 20 days moving average crossover. For long term purpose you might be using 50-day and 250 days crossover. Okay, so like that, when it comes to MACD, basically in MACD what we do, we are again using 2-day time frame for the calculation of our tool, where first we determine 12-day moving average of the data, and the same we subtract from the 26-day moving average. Here we use exponential moving average. You can use simple moving average, that doesn't matter much. Okay, the difference of both is called as MACD line. Okay, so once you got this MACD line, then what we do, we find the 9-day average of the same, and that we call a signal line. Okay, so I'll show you the same thing in MS Excel. Okay, so like the same thing in MS Excel, like here you can see I have taken the data of one stock for this time period between 24th February 2023 to 23rd February 2024. Okay, I have taken the closing price of the stock. Okay, fine. So once here the closing price is there, then what I have done, I found the 12-day moving average of the same and 26-day moving average of the same. So for working on the 12-day moving average and 26-day moving average, I had two options. Either I could use simple moving average or I can use exponential moving average. Here for the simplicity, I have used simple moving average. Otherwise, if you want, you can even use exponential moving average also. For working on exponential moving average, you have to find a constant value called K, and the formula of K is 2 divided by n plus 1. So for 12-day moving average, n plus 1 means 12 plus 1. I have to find 2 divided by 13. While for maybe for 26-day moving average, I have to find 2 divided by 26 plus 1, 27. I hope you understood this. So once you found this K value, which is called a smoothing constant, okay, what you have to do, you have to multiply the closing price of the stock. You have to multiply the closing price of the stock with this smoothing constant. Okay, plus you have to find the yesterday exponential moving average. Like since we cannot use yesterday exponential moving average, so like for example, here what you can do, you can use basically the last 12-day average here in this case. Like for example, if I'm using 12-day moving average, then definitely these are the data of 12 days. Okay, so I have to take 12 days here. Okay, fine. So what I could do, I could started my calculation somewhere here. Somewhere here I would have used started my calculation. So here I would return today closing price. This is today closing price into your smoothing constant. This was your smoothing constant plus yesterday exponential moving average. So yesterday exponential moving average, for that you could have used the simple moving average for that, because there's no yesterday exponential moving average data what you have. You could use simple average of the data or something like that into 1 minus k, into 1 minus k, the same constant. Okay, so then this would give you the today exponential moving average. Once I got the today exponential moving average, then for tomorrow exponential moving average, like on 15th March, for that I could have used the today closing price into this constant. I can fix this cell, then plus yesterday exponential moving average would be this. Okay, now I have yesterday moving average data into 1 minus constant. 1 minus constant means K4, that again make it constant. function F4. So let me write K4 and fix this cell. Okay. So now I got this data. Now if I do double click, I'll get the exponential moving average of all the days. Clear everyone? So here for the simplicity, I have used the simple moving average only. So you know how to find the average. Either you can do the sum of data divide by 12 or you can use average function. So here I got 12-day moving average, and then what I did, I found the 26-day moving average. For 26-day moving average, I have taken the 26 data of the stock. Okay, once I got the 12-day moving average and 26-day moving average, I found the difference of both. Okay, the difference of both is called as MACD line. The difference of both is called as MACD line. So every day you can find the MACD line for the stock. Okay, now once you found the MACD line, once you got the MACD value of the stock, what you can do, you can find the 9 days average of the same. So the 9-day average of the same would give you the signal line. Clear everyone? That is what we have to do in Excel. So first we have to find the 12-day moving average. 12-day moving average minus 20-day 6-day moving average will give you the MACD line. And then once you found the 9-day average of the same, you will get the signal line. Okay, once you found the MACD line and signal line, then the difference of MACD line and signal line is called a histogram. Okay, the difference of both, you got the MACD line, you got the MACD line, you got the signal line. Okay, let me just hide this data. So you found got the MACD line. Okay, control 9. So you got the MACD line, you got the signal line, and the difference of the same is your histogram. Clear everyone? So the same histogram I have plotted here. Okay, so because I hided the data, that's why it's invisible. Let me just unhide. So difference of the same you can see in histogram. The same you can find here. Like this, the histogram what you're seeing, the same histogram I have calculated here. So the same I have done in Excel, the same thing came here. So the histogram, guys, in case if you're not aware, so this is like Bank Nifty data. Okay, on this Bank Nifty data, I just went to the indicator. I just wrote MACD. The moment when I wrote MACD, I got MACD. So here you can see a convergence, divergence. This histogram, what you're getting, this histogram is the difference between MACD line and signal line. You got the MACD line. Um, how you got the MACD line? It is the difference between 12-day moving average and 26-day moving average. That was the MACD line. And signal line is the 9-day average of the same. Okay, and that difference gave you this histogram. So when the difference is positive, you got this green color histogram, which is upward sloping, okay, above the axis. And when the difference is negative, you got below the axis. Okay, and you have noticed here MACD 12 and 26. That is what I have done. I have taken the moving average between 12 days and 26 days, and the signal line was the average of them. I hope you understood. Now this blue color line, what is this blue color line, guys? Blue and this orange color line, what you're seeing, this is a crossover where this blue color line is your MACD line. The MACD line, you remember what was the MACD line? It was a difference between 12-day and 26-day moving average data. And this orange color line is the signal line, which is the 9-day moving average of the MACD line. So when this blue color line cross this orange color line from behind, from below, then it is signifying a buying signal. Okay, signifying a buying signal, and you can see the same effect on the histogram also. And if this blue color line cut this orange color line from top, it signifies a selling signal. Okay, and that the same thing you can see in the histogram. So although MACD is a lagging indicator, but even then you can use for your day-to-day intraday trading decision purpose. Probably it would be wise if you use your MACD, if you are using MACD probably with price action, if you apply price action also into this, then definitely it will help you in deciding your trading decision. Like I just show you. So 1 minute. Let me just remove this, because at a time I can use only two indicator in trading view. So MACD, fine. There's not much momentum is there in Nifty. Let me choose some stock, maybe Tata Steel or something. It was very volatile today. So I'm recording this video on 19th March, so 2024. So might be when you see this video, there would be different time frame. But even then, I hope you are getting some picture in your mind. So here the same thing what I was talking, you can see here. And what I was talking about price action strategy. So for price action strategy or price action mechanism, what I can do, I can draw the support and resistance for this stock. Okay, so here what I can do, I can use zigzag. So I'm using zigzag. This will help me to draw support and resistance. So if I'm using zigzag, go to the setting, price deviation for reversal, make it 0.35, make this 0.35, and pivot leg, make it 5. Okay, so now try to observe in day chart. So if you're observing in a day chart, you can easily plot your support and resistance. So it will be easier for you to plot your support and resistance on the stock. Now I'll observe the same in 15-minute chart. So when you're observing the same in 15-minute chart, guys, now you can use price action strategy here. So imagine when you're observing the same in 15-minute chart, you can see like here the buying signal developed. So when the buying signal developed, that time your stock should be near to support. Okay, if your stock is somewhere near to resistance and there the buying signal developing, there's no point in buying the stock. It might be false signal. So here the buying signal developed. Okay, and your stock is somewhere here. So this it might be a false signal. You can see the stock is approaching it resistance. Okay, so there's no point on buying the stock and all. So then what you can do, the same thing, the stock has went up further here. So here there's no signal developed, although the stock fell down, then stock was moving in zigzag manner. Such thing was not reflected by MACD because MACD is somewhat a lagging indicator. Then here, kind of here, a selling signal developed. The same thing was reflected by MACD here, little bit lagged here. Then you can see here, it's very persistent bearish trend existed. Okay, and because of which MACD fell down here. So nothing much signal developed here. Now little bit buying signal was developed by MACD somewhere here. Although the difference here between the MACD line and signal line is not very much. Okay, the your 12-day exponential moving average and 26-day moving exponential moving average is very close. That's why MACD is not giving very appropriate signal. You can see the difference is very less, so it's not given very much appropriate signal. If I see the same thing, because as such there's not much volatility or there's not much momentum is there in the stock, you're not getting very appropriate visualization. Let me try HDFC Bank, because last few days there is not much is happening in the market, so that's why you're not seeing very good differences. Okay, so you're not seeing very good differences. Same thing if you're observing in HDFC Bank, guys. Okay, so buying signal developed here, and your stock has already was at support here. It somewhere went further from there. Okay, so not very much appropriately here. You can, if price action, if you are using also, you are somewhere lagging here only. When you are using price action, or somewhere here it should show the buying signal, but here it was showing a bearish trend only. The buying signal is developed here. Already the stock has already started going up. Then the selling signal should develop somewhere here. Okay, that has not happened. Okay, this the MACD is still showing the bullish signal, but the stock started falling down. Okay, and then somewhere here the selling signal should develop. Okay, but the buying signal is developing here. So price action and MACD is not working very appropriately with each other. What else you can do? You can use super trend here. Okay, you can use super trend or WAP. You can use super trend or WAP. So if you're using super trend or WAP, you can see like here the buying signal developed, but again MACD is showing buying signal, but super trend is showing bearish signal. So again it shows buying signal for certain time. Okay, this it shows the buying signal for certain time. MACD shows buying signal, but the stock has actually started going up from here, and then it was a threshold for that. MACD is still showing selling signal, and but sorry, the super trend is still showing selling signal, but the stock has reached its top, and then the stock is falling down, and from them the stock is somewhere you can say not very much in appropriate mode, maybe in sideway momentum. Your MACD and all, they're very low. If I'm checking on day time chart, not much as per what you can see in the current market. So nothing much you can predict. MACD is showing different signal. Okay, your super trend is talking something else. Okay, your price action is talking something else. So because you can see this, all the candles are NRC only, narrow range candle formations are happening. So not much momentum you can find in the stock. Here you can see your MACD shows a very strong selling mode from 2nd January to 14 January. MACD is showing very strong selling mode. After that, MACD is showing kind of bullish mode for HDFC Bank. Okay, and when you're observing MACD, when you're observing super trend is still showing a bearish trend for HDFC Bank. So here MACD and super trend, they're not working together. The same thing when I tried using price action mechanism also. So it does not work very much appropriately here. So moving average as such is not giving very appropriate result in the current market. That might be because of the possibility that there's a kind of sideway momentum what is happening in the market. Okay, if I'm observing HDFC Bank here, if I observe here HDFC Bank, if I'm observing here HDFC Bank, okay, so you can see certain days. like you have sideway momentum here. Nothing much is happening. Let me check CPR with pivot level weekly. There's no point. So when I'm observing HDFC Bank also, you can see the sideway movement is there in the HDFC Bank. One day it was, 2 day it was in trend. Again, the sideway market is there in HDFC Bank. So not much you can predict from the current market. Your MACD is working not very appropriately in the current time, but more or less I have given you the mathematical framework of MACD, how MACD works. So your MACD, basically in MACD, we find the difference between 12-day moving average and 26-day moving average. The difference of the same is called MACD line. Once you got the MACD line, okay, then you find the 9-day average of the same that we called a signal line. And then you find the difference of both that is called as a histogram. So whenever you get into the stock and if you click or you write MACD, the green or red color a rectangular representation, what you're getting is the histogram, which is the difference between your MACD line and the signal line. And this, the crossover, what you're observing, it is a crossover between MACD line and the signal line, where MACD is the difference between 12-day and 26-day moving average. I hope you understood the technical indicator tool called MACD. So it's time to wind up this class. Thank you, everyone. I'll see you all in next class. Bye, everyone.